Welcome, ladies and gentlemen, to Commodity TV, and we want to talk today, of course, another edition of our online TV interview series with Scott Eldridge, the CEO of Canarc Resource. Scott, good morning. How are you?
Good morning, Johan. Doing very well. How are you today?
Super, perfect. Yeah, all fine here. Thank you very much. Yeah, Canarc Resource, it's the first time that we actually talk on commodity about the company. Maybe you want to give us a short overview on the company, please. What are you doing?
Yeah, indeed. It's the first time we've had a chance to speak and conduct an interview, so definitely appreciate the opportunity. So as you said, let me start with a quick overview. So Canarc is obviously a public company. We have 3 share exchange listings. Our main listing is on the TSX Big Board in Canada under the ticker CCM. And we are a gold explorer and development company. We're focused solely on Canada. And our flagship asset is in British Columbia, which is a high-grade 10 gram per ton, 1 million ounce ore body that has a very robust PEA on it. And we're now preparing to advance that project into a feasibility study.
Fantastic, super. And I think the project is called the new Polaris Mine. So if it has already the name mine on it, that's quite interesting. And you just received today the exploration permits, and yeah, you are now doing the preparations for the site facilities, which is fantastic for the drill program. So when will the drill program start there?
Yeah, absolutely. So you hit the nail on the head. This is a brownfield project, so it is a past producing mine. It was producing gold in the form of a gold concentrate back in the 30s and 40s. Fast forward to today, there is an unexploited 1 million ounce NI 43-101 resource on the project. And again, it's 10 grams per ton. In the resource category, it's spread between indicated and inferred, about half and half in terms of the tonnage and ounces. And today we did put out a news release explaining 3 different things. First of all, that we've received the exploration permit from the BC Ministry of Mines that will allow us to do 24,000 meters of infill drilling. So that would be about 47 holes. And we need to infill drill the inferred portion of the ore body in order to move it up to indicated. To become eligible reserves in our feasibility study. So Johan, you asked when will that drilling start? Well, we're preparing the camp right now, and that is almost complete. So we will have a full 20-person camp ready to do our infill drilling and leading into our feasibility study as well. And all that activity in terms of the drilling will begin spring of next year.
Okay, super. So it takes a little bit of time, and I suppose that also with the upcoming winter now, it's maybe much safer than to start in spring here to do that. But a future production would work year-round, right?
Yeah, you're absolutely right. So there's a seasonality to the project in terms of the exploration activity. But once this is a mine, whether we own it or someone else, you can recover gold here 12 months a year. That's not an issue. There's an airstrip. It would be a fly-in, fly-out operation that produces doré 12 months of the year. But in terms of the exploration work, to be more specific, we've spent the last 2 months basically refurbishing the camp, preparing it for the drill season come next spring. And as mentioned, we have a full 20-person camp with all the necessary support facilities, kitchen, functional airstrip, and we're ready to go. We want spring to come fast. And we actually recently closed off a financing for about 8.4 million Canadian. The budget for the drill program is about 6 million. So we are fully funded for that drill program. So as I said, we can't wait for spring to come and get the drill turning. And I'll briefly mention some of the historic drill results on this project that we will see again when we get in here and drill in the spring. Again, this is a 10 gram per ton ore body, but there are a selection of extremely high-grade world-class drill holes, 6 meters of 45 grams, 8 meters of 32 grams, 5 meters of 25 grams. So by any measurement, those are world-class drill holes, and undoubtedly we will see results of that magnitude once we commence that infill drill program.
Fantastic. So 47 holes, 24,000 meters. This gives me per hole approximately 500 to 600 meters. Will you go completely to the depths, or are there some holes where you say, no, we maybe have to go a little bit deeper? Some holes you do more shallow?
No, that's a very good question. So as it stands right now, the maximum depth of the resource, and the resource does have a mine plan wrapped around it in the preliminary economic assessment. So as we walk into a feasibility study here, we will do infill drilling probably to a maximum depth of 600 meters. However, the deposit is still open at depth. So there is still a blue sky component to the project, where we have a 1 million ounce resource right now. It very well could be a multiple of that. We don't know until we do some deeper drilling. Let me give you a little more color. So the infill drilling will be conducted from surface, not from underground, because the mine itself is flooded. We haven't dewatered that, which we would eventually do to put it back into production. But ideally, what you would want to do here is get the mine going, get it in production, and then worry about extending the mine life once you're well into the underground mining, and you could start drilling below that current resource depth of about 600 meters. Last thing I'll mention there is this is a mesothermal vein system, and it's very similar geology to what you see in some of the gold mines in the Red Lake camp of Ontario. And the reason I mention that, Johan, is that there's several mines in the Red Lake camp that go well beyond a depth of 600 meters. They can go to 1 or 2 kilometers below surface. So we're fairly optimistic that this is more than a 1 million ounce resource, but time will ultimately tell.
Absolutely. That's great. So what do you think you can achieve with this drill program? Will it be, let's say, give you enough confidence and conversion that you can say, okay, we can start afterwards already a feasibility study? And we will talk in a second about the PEA you had.
Right. So the drill program is specifically designed to give us the end result of a measured and indicated resource. So as I mentioned earlier, as it stands right now, based on the PEA we've already done, about half the tonnage in ounces are indicated, and the other half is an inferred. So the drilling that we're doing is infill drilling on the inferred to create a higher confidence in that portion of the resource, to move it up to indicated, to therefore be eligible to become reserves and submitted to the mine plan in the feasibility study. So ultimately, our goal would be to have between 800,000 and 1 million ounces of reserves in the feasibility study.
Okay, super. Let's talk about your PEA, which was done, I think, at $1,500 per ounce gold, if I got that right. And I saw that you have AISC of $469 per ounce, which is outstanding, honestly, and an NPV after tax of $333 million and IRR of 56%. I mean, those are really beautiful numbers. What would be the annual production then?
Yeah, so the annual production based on the resource and the parameters that you mentioned would be 80,000 ounces per year. And the reason that the cash costs and the AISC are so low is the grade. And we've all heard the phrase "grade is king." That phrase absolutely resonates with this project, because if this were a mine, if we went and built it tomorrow, it would be the 6th or 7th highest grade gold mine in the world. And the grade drives the margin here. So you're absolutely correct. You know, cash costs are in the lowest quartile on the cost curve, and industry average right now, probably AISC is between $800 to $1,000 an ounce for the industry, whereas we're half of that. So we've got a lot of margin for error there. You know, the after-tax NPV is after-tax IRR is what I like to look at. You know, the IRR after-tax 56% at $1,500 gold. This is a rare project, and I think, you know, I'll just end it off with, you know, in any industry, investors look for companies that have competitive advantages. So our competitive advantages is our low cost. And, you know, in the resource sector, this is what Warren Buffett refers to as an economic moat. So it's a competitive advantage that none of our competitors can actually copy. It's an inherent in our business model.
Mm-hmm.
So we're looking forward to move this project forward and really hit home on those potential cash flows that we could deliver here to shareholders.
And as far as I understand, you want to bring that also in production, and I think the capex is around $120 million. By the way, is it US dollar or is it Canadian?
No, that's a great point. So thanks for putting that out. So the capex and all the operating parameters are listed in US dollars in our PA. Mm-hmm. So the capex is approximately 110 million US. Mm-hmm. And I'm very optimistic that this is a project that Canarc could move forward on its own. There's plenty of junior companies out there that investors can do well in, but they are faced with significant capex, in the range of 200, 500, $1 billion. As an investor, you ask yourself, will this company ever build this mine? So we have a very modest capex of 110 million US. So we're more than happy to build this ourselves if we're not taken out on this project.
Okay, super. Yeah, and I mean, also if I look at the capital structure, or let's say also the market cap is around 40 million Canadian dollars, and you're just at let's call it at the beginning, yeah. So I think there's a lot more room for a higher valuation here. Let's say as a catalyst before drilling, and then really move forward to a feasibility study. Can we also talk shortly about the Fondaway Canyon project, which we have farmed out? What's going on there?
Right, so we have optioned our Fondaway Canyon project located in Nevada to another junior mining company called Getcha. So with Canarc, we made a board decision that we wanted to shift our strategy to be something very simple. We're gold only in Canada. And that's why we have a business model of optioning out properties that we hold within our portfolio to other companies. And in exchange for that, they agreed to give us shares in their company, cash payments, royalties on the property, and minimum annual exploration expenditures on those properties. So the main property that we have optioned out, amongst others, is Fondaway Canyon. And we look forward to our partner on the project, Getcha, moving that project forward. And in fact, they've recently finished a drill program there, and we should see results fairly shortly.
Mm-hmm. Fantastic. That's great. Yeah, so that really looks all good. I would say the game plan is quite clear for next year. Start drilling, bring good results, and then, let's say, move it.
Yeah, it's fairly simple. We have a flagship asset. It's a world-class asset. It's in one of the top mining jurisdictions in the world. We just got the exploration permit renewed from the BC government, and we're fully funded to do the infill drill program. So again, we're really excited to get that drilling going, and we're cashed up, and we feel our valuation is relatively low compared to our peers. One of the metrics that investors can always look at for a company, at a PEA stage, is enterprise value per resource ounce in the ground. So Canarc currently trades at about $30 an ounce in the ground, whereas our peers are more in the $50 to $60 range. And in addition to that, as we further de-risk our ounces and they move into reserves, we would anticipate trading at a valuation closer to $100 an ounce.
Mm-hmm. Okay, super. So there's a lot of room for higher valuation, and I would say thank you very much, Scott, for this insight into your company. I have a good feeling that we talk quite more often in the future here, because I really look forward to your drill results, as I'm a shareholder of the company also for disclosure reasons. And yeah, thank you very much, Scott. I wish you all the best.
Yeah, pleasure. Thank you very much for hosting me.
Thank you. Yeah, ladies and gentlemen, that was Scott Eldridge, the CEO of Canarc Resource. And you heard it. The new Polaris Mine is something they want to bring again in production, of course. Very good PEA. The company is fully financed. Everything looks really great here. And we really cannot await that they can start the drilling in spring here. And of course, we keep you posted on the results. I would suggest you check out the company, as this is just the beginning of a great success story. Thanks, and bye-bye from Switzerland.